Are you tired of outdated trading strategies that don't just deliver the results that you're looking for? Well, in this video, I will reveal the secrets behind this groundbreaking strategy that I'm about to share with you here today that could potentially help you achieve better results just like this. So buckle up and make sure you watch this video until the end. I'm going to explain this strategy from A to Z by analyzing and taking the actual trade on this pair live with you here today, and I will probably share the results of this trade at the end of this video. So rule number one of this trading strategy is always analyze the market from different angles, different perspectives. Don't just start trading zoomed in on one time frame only. Always start analyzing from higher time frames to get the general perspective of the market and then gradually descend to the lower time frames for entry. Now on the 4-hour time frame, we can see that the market was from a very sharp uptrend movement. And since most traders know that for an uptrend market to continue, it has to retest at one point, and this will make them to start drawing random levels, forcing trades like here and hoping for the market to bounce off from here to the opposite direction. Now the markets are moved by humans, or let me say precisely traders' emotions. Traders' emotions are what move the trades markets, and since this is known, the market of course will play out a little bit going to the upside, making those traders develop a thing called fear of missing out, or aka famously known as FOMO, and make them add more positions of course, trying to catch this uptrend movement and trying to fool as many traders as possible into buying trades. You should know that whenever the market moves in an almost clear straight line like this in either direction, it has to retrace this movement back to almost 80 or to 90% of it, as no market in the world moves in a clear straight line like this. And looking at this retracement right here, it is not where even near 20% yet. Zooming in further and deeper, we can observe here that the Doji candlestick actually formed right here. Now, it is important to know that even though the Doji can famously act as a reversal candlestick, in some cases it might act as a continuation pattern. You just need to know when to connect the dots. And since we have the information that this move here has to be retraced to almost 90% of it, then it is reasonable to see this Doji candlestick right here as a continuation pattern and not as a reversal pattern. Now this information, it is not so common available in the internet or in the textbooks. You can even rarely find it in the internet, and as you know, the money is in the information. Since many just read the books that the Doji is a reversal and end there, and then almost 90% of traders will enter into this kind of trades hoping for a reversal and miss out the most important information and come here to say, oh, everything does not work, Forex is a scam, blah blah blah, I doubt even people make money in Forex, all this is fake. Those are words from a loser. And guys and girls, this is why statistics say almost 90% of traders worldwide never get profitable. If you think that is a coincidence, then I have some bad news for you. So let's get down to the lower time frame to find appropriate price to press my stop loss for this trade, because on the higher time frame already provided me with all the conferences and my capital allows me to trade on higher time frames. And now since on the 3-minute time frame I see that the Doji candlestick were making a lot of resistance through the wicks right here, and since trading is of course a probability game, and since I'm good at it of course, I will press my stop loss just above this wick right here and then press my trades as follows. If you want to see how this trade will play out, then don't skip this video yet and wait for it to show you right in front of your eyes.
A few moments later.
Remember, no method is foolproof. There's always some degree of uncertainty in trading. It's essential to practice risk management, set appropriate stop loss orders, and consider the broader market constants when making trading decisions. Guys and girls, thank you for watching. I hope this video has been helpful. If you have any questions or comments, please leave them in the comment section below. I will keep uploading videos explaining this strategy that I'm actually using so that we can make money together. Please do not forget to like and subscribe for more trading tips and strategies. Until next time, happy trading.